Hello traders, welcome to part 2 of Mindset, Beliefs, Behavior of the Trader. Start off with a quote from Richard Dennis. I always say that you could publish trading rules in the newspaper and no one would follow them. The key is consistency and discipline. And I want to emphasize that to traders. A lot of traders are looking for trades. They're looking for trades every day when a market's up high or down low and calling it an ACB. And I'm going to encourage you to go back through all the modules, the best of the best especially, and understand the basic ACB template is a Wednesday close and breakout, high close of the month or week, low close of the month or week, sideways into a session, New York session timing window. The 3-session setup is the ACB template. Now we've discussed that there will be markets that will move in Asia and go to the close. There will be trades that will go in London and go to the close. And we will look at some of those examples today. And what that means in the New York session is that they have left the station. But what I'm finding is that traders are trying to short markets or buy markets just because they're up high or down low. And there is no setup. There is no ACB setup. And this is going to come back to we're going to look at some higher time frame charts today. Again, reinforcing to traders to build your muscle memory on what an ACB template is. Otherwise, you're going to consistently be inconsistent because you're trying to take trades. And traders are saying, well, I don't understand when it goes sideways. When it's coiled, it can go either way. And I'm going to repeat that. You do not use the EMAs until the market is set up. That is the coil once it's set up. And you can only trade in one direction. So it's imperative that you go back through all of the PDFs and understand what a well-engineered ACB template looks like. The whole point of this is that you want to be attacking markets that are going to be scalable, not guessable. We're looking for the setups that aren't coming back, that are scalable in size. So I need to say that to, again, the title of this module is Mindset, Beliefs, Behavior of the Trader. If you're looking for trades, you're still not in the ACB mindset. You want to put yourself in the ACB mindset, which is where do I have a 90-10 edge that's scalable, where I can scale into opportunities that aren't coming back, that have the potential to give me a large 5-to-1, 10-to-1 asymmetrical risk reward, but also over time scale them up in size. Traders are also just looking at markets that are up high and down low, and they're trying to counter trend higher time frame trends. We went over this in the other modules with the higher time frames. Broken markets are the gifts that can keep on giving, or trending markets are the gifts that can keep on giving. We have 1 and 2 day counter trends. We're going to go over that again today. So you need to study and look for the best setups and not just try to catch moves at the extremes and call them ACBs. Those are not ACBs. Those are counter trend trades off of the extremes. And in a lot of cases, can be difficult, can be 50-50 or less, and are not ACB templates. Well, let's start off with the British pound just as an example. So when a new month starts, new month, new timing cycle, we have a market that closes and breakout towards the end of the month. Somebody asked today, they still don't understand what close and breakout means. What that means is it closes outside of a previous day's high or low. And you'll notice we have 1, 2, 3 lower closes, and that proceeds to go 1, 2, 3 higher closes, closing out the month. Now, I want traders to recognize the close and breakout long comes out of a consolidation, 3 days in range. The market closed and breakout after 3 lower closes, and then we went sideways for 1, 2, and into the third day we go vertical, long, close, and breakout. We proceed to go 1, 2, 3 into the closing day of the month. And when the new month starts, we're inside of the previous month's range. We're inside of the previous month's range. Now, traders are going to call this first down day a first red day. Now, we have a market that closes and breakout after 1, 2, 3 higher closes. And again, we go sideways for 3 days in range, where we're closing inside of the previous day's range. So we break out, we close back in range, and I want traders to understand that we now have a one-day counter trend in a market that closed in breakout long. So traders were inside of the range, and they're calling this a first red day at the beginning of the new month. We're pumping up inside of a previous month's range that closed down. We pumped up inside of a previous month's range that closed down. This can now be setting up for a first red day at the high of the new month, inside of a month that sold down. Now, the reason why I'm going over this is because what's happening is that traders are calling every down day a first red day, and then every up day a first green day. And I want traders to understand we're inside of a previous month's range. We're pumping up. We have a one-day counter trend. We're pumping up. We close and breakout. We coil sideways again. We go, pay attention to this. We close and breakout, and then we go back into consolidation. Now, there's other session trades in here. Yes, but we're talking about the ACB template. Now, a couple of traders have messaged me, and they completely understand now the idea of a broken down market. When a market breaks down and pumps up and closes and breakout, now we can potentially have our ACB template coming inside of a first red day. So this may have given traders a short trade after payrolls or whatever session trades they had, but we're looking for the ACB Wednesday close and breakout. Now, if we're in a broken down market, as we talked about, that can be the gift that keeps on giving. We have traders over on the right side over here in a market that's closed in breakout, and they're trying to short the high, calling it an ACB template, and we're at the beginning of a new month, in a month that's making higher highs and higher lows, and we're trading back above the previous month's range. We're now in breakout. And this market may fail and break down and give us, again, a broken down market, but we're not trying to catch the high and call it an ACB. This market is still trading higher. It's still trading higher, and it's inside. It's not coiled sideways at an extreme. Notice when we get out to the extremes, these markets typically will wick, and we talked about this, breaking out again before reversing, falling in line with our original breakdown, lower lows, lower highs. A failed breakout is what we're attacking with the ACB opportunity. So we're not just trying to catch something that's at the extreme. We're looking for markets where the money is going to be laying on the floor in the corner. It's already breaking down, coiling sideways, breaks down again and pops up in a new month, new timing cycle, and an example of where we can have markets after they close and break out again and fail and reverse in line with our higher time frame. New month, closed down again, breaks down at the beginning and pumps up, closing in breakout, which is where other days can offer us the ACB templates if we see this close and breakout. So what I'm trying to encourage to traders is not to be just trying to sell something at the high all the time and calling it an ACB because it's at the high. If it's setting up in the timing window near the end of the month or at the high close of the month, low close of the month, when we're inside of a previous month's range, now we're looking at potentially high closes of the week or low closes of the week, offering us the ACB trade setup. The breakout we see in December is close and breakout is on a Tuesday. The close and breakout that we see in January is on a Wednesday. We'll take a look at both of these just to see how they set up in the timing windows and which session potentially offered an ACB setup, and then contrasting the two and identifying if one of those met the criteria for the basic model, the Wednesday close and breakout, highest close of the month or week, lowest close of the month or week, and coiling sideways into our timing window. The Wednesday collapse came on an FOMC, but again, I want traders to recognize the sideways coil, close and breakout at the highest close of the week in a market that had broken down from our first red day collapse. We have our close and breakout on a Tuesday heading into the FOMC. So this did not meet my son's criteria for the basic model as this moved on FOMC, but the same template applies. Obviously, I'm not trading FOMC, but the pump, coil sideways, and dump. Now, if we zoom in on this, just for simplicity, traders have said again, well, it can go either way. Well, if there's FOMC and there's a news release, well, clearly we can't do anything until after the news. And after the news, we have our sideways consolidation. So again, recognizing what sideways means. Sideways means a rectangle. Sideways a closing price. It pumps back up. And obviously, traders, if they were going to gamble and take this before the release, they had an engulfment. But we can't do that. You can't trade high impact major red news. But this is a 5-minute chart. But after the news, we have an opportunity if traders were going to position themselves in a news momentum catalyst, if that's part of their plan. This is not the ACB. It's an ACB template, but we have FOMC. But you can only trade in one direction. Short. That's the setup. It's a pump, coil sideways, and our engulfment, if this was just a normal day, occurs up high. And obviously, if without the major red news collapse, that's a first bar entry that traps all the volume up high and continues into the close of the day. Sorry, this was a Monday in January that closed in breakout. We'll take a look at that. So this was a Wednesday FOMC that collapsed. We had the coil sideways into our end of our month, but you'll notice we also had a close-in breakout out of that consolidation. We're still sort of in the larger range, but the market closed in breakout on the 27th. We'll look at that in a moment. And that was a Friday, Monday, Tuesday, Wednesday. So differentiating in ACB, obviously there's session trades for London, New York session traders, but this is not the ACB template, the one-day coil sideways template. This is a larger session opportunities, just higher, following the higher time frame. A market that closes in breakout, pumps up, breaks out again, reverses in our New York session. There's a reversal trade, new month timing cycle. We're about to end the month. We're on the 30th on the Monday, an inside day, and then the coil into the London window. This is not an ACB template. So again, if we're taking session trades, whatever trade setups are part of your trading plan, but this is not an ACB setup. Okay? So when we are looking for the basic model, when my sons come to the screen, they're looking on Wednesday's closing price at the extreme, highest closing price or lowest closing price of the month or week, the coil sideways. These are markets that are pumping dump inside and aligning with the higher time frame thesis with our setups. Bringing us to this week, Friday traders were trying to counter trend the high, calling it an ACB setup, and that is not an ACB setup. That is a market that is continuing to trade higher, closing in breakout, making higher highs and higher lows. That is not an ACB setup. That's a trend. Now, whether traders trade that as part of their plan is up to them, but trying to catch the high up here is not an ACB reversal. Understand that. A market that closed on Monday in breakout, coiling sideways into the timing window for our London session traders is a reversal. And if we go and look at our smaller time frame to see if there was indeed a coil for London or US session traders, and you'll recognize that we go Friday is an inside day, Monday closes in breakout, and we have a 3-day dump and pump type of template setting up, closing in breakout at the lowest closing price of the month. So if we back this up, we're at the beginning of the month. The previous closing price was at the beginning of the month. That was our lowest closing price of the month on a Tuesday heading into our London window. And when we come into our US session, again, I'll encourage traders to build their muscle memory. We have a rectangle. The market's already closed in breakout. It's broken out. We go lower. The market breaks out again and then pumps up, making a higher high. We've gone back to the breakout level. So we have volume trapped in breakout down low for the dump and pump coil. Now, let me repeat this. If you are trading this, you can only trade on one side of the coil. There's only a long setup in this coil. If you're trading over here, you're not following the rules. You're trading down low. You're trying to short this down low in a market that's at the low of the month. That is not the ACB template. The ACB template is close and break it at the highest or lowest closing price of the week, coiling sideways into the timing window. And in the London window, we've already gone vertical for a long trade and then coiled sideways into the US session, a 3-session setup, and then the ACB hold till close. Entry, stop loss can be placed at the extreme or below the low of day level. We already have breakout traders trapped in the markets. We can put it below our box. Our box is the area where price consolidates inside of the EMAs. And then once it breaks out and closes, going to break even and walking away. An ACB on a Tuesday at the lowest closing price of the week and the month on the front side of a new month, the second week. Week 1, week 2, reversing now, we may have the low of the month in place. Bringing us to Friday, we have a market that on Thursday closed in breakout, making higher highs and higher lows, coming out of our first green day at the low of the month, coiling sideways into our London window and trading higher in line with the higher time frame trend, coiling sideways again into our US session window and trading higher. And there are traders trying to counter trend this, catching the high because it's up high, calling it an ACB. That is not an ACB template. This is just a trend trade. A trend trade in a market that is now trading above the previous month's high of month level. If we go back and look at our higher time frame chart, and we're also trading back through high of day levels. We're going higher. We're continuing to trend. Now this market may break down, but we have no indication of that just yet. This market is still going higher. We're not trying to catch moves. We're not trying to, catch the high. We're looking for the ACB template, the ACB setup, the sideways coil on any market, not trying to counter trend a market because it's up high. And when we have markets that break down, they can continue to offer us shorting ACB templates if they close in breakout at the highest closing price of a month or week. As this market breaks down, we can get them at a weekly level or we can get them at the monthly level, and sometimes they will show up on different days. Once this market has gone into consolidation and closes in breakout again, we potentially may now be going back in the other direction. So this broken down market may now be putting in a new low of month level and reversing and becoming our first green day and starting to head back in the other direction. Now, when we start back in the other direction in a new month and a new timing cycle, we can see 3 lower closes in breakout back inside of a first green day. And that may offer traders a potential ACB setup, which is what we just looked at on the Tuesday that coiled sideways in London, broke higher, made higher highs, coiling into our US session window, starting the reversal at the beginning of a new month. Peak formation inside of our larger first green day. So it's so important to be patient and just step back and look at the higher time frame, because that's where we're getting our setup from. So one thing I'll encourage traders to do is go back through your daily charts and understand that when a new month starts, okay, you're either inside or you're outside. If you're inside, chances are we're either going to get a pump for a dump or a dump for a pump, depending on how that template sets up. And if you're in a market that is trending, and what that means is every day, for example, higher highs, higher lows, we have a first green day in a market now that has closed in breakout, continuing back towards the high of month level and continues to trade higher in breakout. And we get a down closing day, and the first thing traders are going to say is that's a first red day. Is that a first red day? It's a down closing day, but we still have higher highs and higher lows. So walk through and mark your charts up, and then we have a day that closes below the low of that down closing day. That's our first day that breaks a daily level. That's a 1 day, 2 day counter trend now in a market that is trending higher. And you'll notice it did not break the low of day of the bullish breakout candle in our broken out market. We have a down closing day that is a higher high and a higher low. The first daily level that's broken is our down closing day, but we're inside of our bullish candle that, if you notice here, has closed in breakout. Now, what this signifies is potentially an opportunity on the following day for traders in your session, for session trades, resuming the trend. Okay, we broke a daily low, but it's inside of our breakout candle. Then we have an inside day. Traders are going to call that a first red day as well. It's a down closing inside day in a market that continues to make higher highs and higher lows, and potentially an opportunity. Now, breakout traders are in the market following this on. Doesn't mean you're going to get a session trade, but it also means you don't want to be trying to counter trend an underlying strong trend. We have a red day again, but higher highs and higher lows. We still haven't broken a daily low of day level until the bullish close at the end of the month. And then we get our lower low and a down closing day that collapses back into higher level longs. The point I'm demonstrating here is for you to walk through and recognize counter trends versus calling every down day a first red day or every up day a first green day, as we can see in a market in August that continues to break down. We have an inside day. We have a 1 day counter trend after a green day, but it's still inside of our bearish candle. And this can set up continuation opportunities and sometimes ACBs in broken down markets. Counter trend markets can set up long trade opportunities in markets that are in breakout long. Very important to acknowledge and understand a counter trend day versus a true first red day or first green day signal. You can look at any market. Gold is an excellent example. We have a market that broke out at the beginning of the new month. We have a 1 day counter trend. That's the first day that a daily level has been broken. Traders are asking, is that a first red day? We have a market that has broken a daily level, but it's a down closing day in a market in breakout. We coil and continue to trade higher. We have a pin bar reversal in a market that closed in breakout. Again, a 1 day counter trend closing back in range. Now, obviously, the question that needs to be asked every time is, which setup are you trading? Or are you trading the markets? And there's going to be, decisions for traders. They can continue to take trades, but I'm trying to demonstrate differentiating markets that are counter trends, and then when we have markets closing in breakout at the highest closing price of the month or week, and potentially offering us an ACB template. As we saw on Friday, it was a CPI week, and that threw our template out by a day. CPI was on Wednesday. We closed in breakout on Thursday. Friday gave the reversal trade setup, a session setup in the New York session on gold. We went through that template, coiling sideways, breaking down on major red news again, pumping back up, and the 10 a.m. reversal after the New York Open, and collapsing into the close. An ACB template on gold at the highest closing price of the month after closing in breakout. Now, again, muscle memory, coiling sideways, breaking down on major red news, pumping back up, engulfing, and collapsing into the close. ACB, it ain't coming back. So walk through your daily charts, because part of that is recognizing when we do get signal days closing in breakout at the highest or lowest closing price of the week or month, what type of template? Are we in a broken down template for shorting opportunities? Are we at the high of a month and coiling sideways? As we looked at on the British pound, there was no coil there. Traders are trying to short the high, but it's still trending. Build your muscle memory. In this particular template, after major red news, we can only trade short. We can only trade short after the news. There is only one side of the coil. Only one side of the coil. Position, entry, stop loss, break even level, and hold till close. We'll see you in the next video, traders.